This is Nvidia on the monthly chart, and after the huge move higher from the October lows, which saw price rise 300%, price is in a consolidation pattern at the moment. And you can see that a bit better on the weekly chart. Price has been sideways since forming weekly buyers or weekly buy level at $380. Going down to the daily chart, you can see now price is below the most of the moving averages. This is the 200-day moving average. Again, applying just a sideways range bound price action since roughly June. Now we did get news out in the last couple of days, which is serving as headwinds for Nvidia's price. Let's get into it. Analysts lower targets on Nvidia stock after significant setback. Shares fall. Nvidia shares have continued to move lower in response to the U.S. government's decision to restrict the export of advanced chips to China. In a regulatory filing, Nvidia has highlighted the possibility of export controls affecting its ability to complete product development in a timely manner. Moreover, these controls could potentially disrupt support for existing customers of affected products and their supply to regions impacted by these restrictions, the company said. As a response to these challenges, Nvidia may need to reevaluate and possibly relocate certain operational aspects from one or more countries. On a more positive note, these challenges are not expected to have an immediate financial impact, but they could if the prolonged tick-for-tack continues between the U.S. and China. Analysts at Citi and Morgan Stanley lowered their price targets on Nvidia. Here's what Citi had to say. We are de-risking our fiscal 2026 estimates and assume low likelihood of U.S. government granting export licenses. We believe the scope of the new performance density threshold will make it difficult for Nvidia to sell to China, as it will require more than the networking modifications it made on prior A800, H800 China products. As a result, the analysts slashed their price target by $55 per share to $575, which is still above current levels. Here's what Morgan Stanley had to say. They cut their price target by $30 to $600. Again, still above current price. As export controls are more draconian than our expectations, we were expecting a tightening of specifications, but the broad-based license requirements in the gray area create more material uncertainty for a region driving 20 to 25% of the demand. Part of the demand, you have the China tech companies. Baidu just unleashed their ErnieBot 4.0. Again, you need the GPUs from Nvidia to power Ernie. So, as an example of the demand. Kind of going back to the daily chart now. Again, this is the level that was formed back in June. You had a gap higher on earnings, so this is considered a leg in. This area here is considered basing candles, and then you had your leg out. Not the strongest leg out, but nevertheless it did form a weekly bias level. So I anticipate more downside pressure on Nvidia, but I also consider, and what the charts are suggesting, if price moves down another $50 or so, not only would it be a great opportunity to go long, this would be what's also considered a bear trap, where support resistance traders will get short if price breaks down from this range, only to be met at the $380 level with where buyers are waiting to unleash their and fill their buy orders. Thanks for watching. Subscribe. Please like the video.